The U.S.-China trade war. A quick overview. Ever wondered what the U.S.-China trade war was all about and its lasting impact on the global economy? Let's break it down. The U.S., under the Trump administration, initiated tariffs on Chinese goods, citing unfair trade practices and intellectual property theft. These actions aimed to reduce the U.S. trade deficit with China and protect American industries. China retaliated with its own tariffs on U.S. products, escalating the situation into a full-blown trade war. This tit-for-tat approach created uncertainty and volatility in international markets. The trade war disrupted global supply chains, forcing businesses to find alternative sources and potentially increasing costs. Consumers in both countries faced higher prices on imported goods. Economists debated the long-term effects, with some predicting slower economic growth and others anticipating a restructuring of global trade relationships. The impact varied across different sectors and regions. In January 2020, the U.S. and China signed a Phase 1 trade agreement, aiming to de-escalate tensions. China pledged to increase purchases of U.S. goods and services, while the U.S. agreed to reduce some tariffs. However, many of the initial tariffs remained in place, and the underlying issues of intellectual property and market access were not fully resolved. The agreement provided temporary relief, but didn't end the trade war entirely. The U.S.-China trade relationship remains complex and continues to evolve. Understanding the history and impacts of the trade war is crucial for navigating the future of global trade. Want to delve deeper into specific aspects of the trade war, like its impact on specific industries or the details of the Phase 1 agreement? Leave a comment below.